Hi, I'm Michael Yardney, and The Block was again a hugely popular TV show. 3 grueling months of sleeplessness and renovations paid off handsomely for 2 teams, but the others failed to achieve their desired results, teaching a group of would-be overnight property moguls that there's no such thing as get rich quick in property. If you were watching it, you'd have found that 2 teams pocketed more than $300,000 each. 1 team took about $40,000 home, and 2 teams earned a paltry $10,000 for their weeks of backbreaking work. The results seemed to be shocking some people, but not to those who understood the risks involved in renovations and property development. Now, don't get me wrong, all the properties sold on the day at what I think were actually very fair prices, so in that regard, The Block was a success. But if you ran The Block as a business, and if you added stamp duty and buying and selling costs, interest for the holding period, payments for labour, selling costs and all those things, there was really no commercial profit in doing these renovations. But then we know that reality TV isn't real life, is it? Now, there's nothing new about this. You can't make money in renovations with a buy, renovate and sell strategy, especially if you're going to break all the rules like they did in The Block. Now, let me be clear, I still think renovations is a great property investment strategy. Doing renovations increases the value of your property, makes it more appealing to a wide range of tenants, it increases the rents, and it helps you manufacture some depreciation allowances. However, the concept of The Block is to make money out of renovating for a quick profit. This is too risky. My strategy is to buy, renovate and refinance and hold for the long term. It's just too hard to make money out of buy, renovate and sell. So what went wrong with The Block? I feel they broke many of the rules of successful property investing. First of all, it was the wrong location. Clearly the location was secondary, a busy main road in the worst part of a good suburb. I would have chosen a suburb where there are plenty of deep-pocketed, downsizing baby boomers, those who would be prepared to pay a premium to live there. In today's fragmented property markets, choosing the best location you can afford is more critical than ever. Location's always been paramount in smart property decisions, and The Block showed that the glitzy interiors can't make up for poor location. The second mistake was the wrong property for the location. The prominent demographic in the areas in Parana, students and Gen Ys looking for 1 and 2 bedroom properties, not multi-million-dollar 3-story apartments. Third mistake was the wrong price. The median price in the area for 2-bedroom apartments is $560,000 and $829,000 for 3-bedroom apartments. There are very few people looking for $2 million properties in Paran, so it was really lucky that they sold all the properties anyway. The fourth mistake was the wrong budget. The blockheads made the fundamental flaw of over-capitalising and renovating to their own tastes rather than to the requirements of their target market. So what lessons could you learn? What could we learn? How would we ensure that we don't end up over-capitalising as many investors and renovators do? In my mind, there are 4 rules to make sure that most renovations work well for you. First of all, determine the right purchase price. Buying a renovator's delight at any price just doesn't work. You've got to get it at the right price to ensure that you make some money when you finish your refurbishments. I've just found if you pay too much for the property at the outset, you're going to be chasing your tail the whole time trying to make the refurbishment profitable. By determining what the end values of your property are when you've completed them, and when you work out all the costs of all the planned works, you do this by researching similar renovated properties in the area. So once you've got these end values, then you draw up an initial project budget, you calculate what your approximate renovation expenses are going to be. You probably also should consider getting a building and pest inspection on the property so you know exactly what you're in for. Don't let yourself get into the problem that the Block did. I don't know if you watched it, but they came across an unexpected underground petrol tank that would have blown the budget of ordinary investors. Now, once you've got those final prices, now you subtract all your costs from the end value, allowing for a profit margin, and that'll give you a fair idea of how much you can afford to pay for the property in order to make the investment financially viable. The second rule is be realistic with your budget. Fact is, the job's always going to cost you more than you expect and take longer than planned. In today's shortage, there's a shortage of good labour. It's hard to get tradespeople to work quote on renovation jobs. I don't know if you found that. We've all heard stories of how the budgets blew and the project took weeks longer than expected. It's never as easy as it looks on TV. And yeah, funnily enough, I've never seen tradespeople look as good as they are on TV. I've yet to encounter a tradesperson wearing neatly pressed overalls. Next rule is consider the type of tenant or owner-occupier you wish to attract. Think of who's going to lease your property and renovate with them in mind. Maybe you should have a chat with your property manager to determine the predominant demographic seeking accommodation in the area. Plan your renovations accordingly. Of course, if you're planning to sell, target your end product to a wide demographic, not a narrow demographic, and not a narrow spectrum of potential buyers. And the last rule is don't get personal. Another mistake I see investors make is to become too personal about their renovation projects. Remember, you won't be living in it, so putting your own personality into the property is not necessarily a good idea. If you keep things simple and the decor neutral, it just makes it more livable, more functional, you're less likely to go wrong. Property renovations is not a license to print money. The results in the block are evidence that the reality of what can really happen in renovating properties. It's hard work, but of course it is a great way to increase your rental returns and manufacture some capital growth to boost your property investments. To be successful, you need to understand the importance of location, you need to know your target market, you also need to know the competition of the stock in the marketplace, and lastly, avoid overcapitalising. If you'd like to get involved in renovations, the team at Metropole specialise in it. We actually have done 70 renovations for our clients last year. Why not have a chat? Give us a call on 1300 20 30 30 or go to metropole.com.au. If you're a beginner, we'll help you formulate a property strategy. If you're an experienced investor, we'll review your current portfolio and see what options you've got. Look forward to being part of your wealth creation team.